Good morning, everyone. This is Louise Lovewell of the Lovewell team, along with Katie Lovewell. And our special guest today is Bill Jarvis, our wonderful loan officer. So he is going to tell us what's happening with the great interest rates and all that good stuff, like what's happening in the world of financing of that. So take it away, Mr. Bill.
Okay, well, pretty boring. We're still, rates don't change. All the craziness in the country and the world, and rates are still about the same. So we're just under between 6.5 and 6.75 on the 30-year fixed conventional. FHA and VA are about 6.25. It's probably right, almost exactly where we were last, 3 months ago or whatever when I talked to you. The There's still some thought that rates will come down, although I think that's tempered a little bit. By the end of the year, I don't think anyone thinks we'll be below maybe 6.25 on the 30-year fixed. There certainly are some things that could make rates bounce up maybe a little above 7. So, I think for the rest of the year, we'll be somewhere pretty close to where we are, hopefully slowly going downward, but not nothing huge. It'd be very surprising if we got under 6 1/8 by the end of the year. We're looking at maybe next year possibly being a little lower, but all the big forecasts now, most of them are, looking to year end at 6.25 to 6.5. Some are actually a little higher, so pretty much right where we are. And so, not a lot of movement for all the crazy, you know, job things and an oil change and wars and everything. The rates are hanging in there pretty steady. So, we're probably looking at next year to even have a chance of getting into the high fives. So for people waiting to buy a house when the rates come down, it's not looking like it's anytime soon.
Well, that's what I don't know who said it, but what's the classic line? You marry the house, you date the rate. So just
Right, right. Well, and the other thing is, I mean, if rates did suddenly go down, I think prices would that same day shoot right up. So, keep that in mind too. If you can get the house now when the rates are a little higher and refinance when the rates come down, you'll probably be ahead. If the rates do come down, um, it's almost assuredly prices will go up. So same story.
and the thing is, there's so much wonderful inventory that Katie's going to talk to us about, and I'm going, I just I don't know. I think if I were a buyer, it's like, in my opinion, it's kind of the perfect storm.
Yeah, could be. So yeah, the rates, there definitely is more inventory. We're seeing people getting houses without, huge competition with crazy overbidding and things. So yeah, the last couple of purchases I've closed, they seem like they're pretty reasonable prices, and we actually got some concessions which we hadn't seen in years. So uh, that was good. Those people should be in good shape. And like I say, if rates ever do come down, which most people think they will, you can refinance and enjoy that lower payment and still have locked in the price uh, in this time where there's not so much crazy competition and people overbidding by $200,000 and all the things we've seen for the last several years. So should be good.
Are you seeing, we had a Remax meeting last week and they were talking about the buy downs. Are you seeing very many of those?
Yeah, so there's um, until this last 6 months or so, those were pretty much we'd see them from builders, but we didn't see them from normal, resale houses, and those are coming back for sure. The if there's a substantial seller credits, and the other thing that's nice about those, it's different than how those used to be. The buy downs used to be you buy the rate down, and if the interest rates changed, whatever the cost of the buy down was just lost. And now, if you do get a seller buy down, that money actually goes into a separate escrow account. So it actually, if your payment savings is, 2,000 or no, not 2,000, $500 over the course of a year, that money is actually put into an escrow account. So if the buyer doesn't have that loan for whatever reason, sells the house or refinances, they actually get that money back. So that's a pretty big difference than what these things used to be a few years ago. That the buy down money is actual money. It's dollar for dollar for the payment savings. And
So
if rates do come down in 6 months and say it was a 2-year buy down, the the owner of the home that has that loan would get all that money back. They'd get the 18 months of whatever the buy down was credited to them when they pay that loan off. So that's a nice feature.
So my question is, so how much is the buy down? Like, what does it, if I'm a seller, so let's say Katie's the buyer and I'm the seller, what am I giving to Katie?
The most common ones probably like a 2-year, a 2-1, so it'd be 2% on the first year, 1% the second year.
Okay.
So it's a lot. It's if it's a $500,000 loan, it would be $9,000 or something. And
So that $5,000 goes into an escrow account for Katie?
yeah, it's kind of invisible, but yes.
Okay.
So that would be exhausted as she makes the loan. So Katie would make a pay if the rate's 6.5, Katie would pay 5.5.
Mhm.
That extra 1% would be in this account. So Katie would be paying 5.5, but that the 1% would be paid through this
To the escrow.
reserve little escrow thing.
So like, let's say that this document was her statement, like her statement from the mortgage company, it would show on their escrow account
It doesn't
5,000.
actually even show that, and so it would just show her 5.5% payment. But if she went to refi, that she would get that money back, the extra credit that's in there from the seller. So it doesn't really make sense for the buyer to put that money into escrow because the buy down actually is dollar for dollar. So whatever every dollar of savings Katie would have over the say 2-year period of the buy down, the seller or someone would make that payment at closing to the new lender. So it's a lot of money, but
Okay.
those are definitely available.
And you're saying that the first year, so if the going rate is 6.5, the first year Katie would pay 4.5, and then
Second year 5.5, then
in
6.
2027 it would go to 5.5, and then in 2028.
There's all different flavors of buy downs, but the idea is the seller would pay it's either 1% or 2% for typically 2 years, but it could be more. I haven't seen other than a new home seller do anything bigger than a 2-1 buy down, but there are bigger buy downs available.
Okay. Well, thank you, Mr. Bill.
Sure.
Katie, you have questions or?
Nope, that was very helpful. Thank you.
All
Okay.
right.
Thank you.
Thank you, Bill. Till the next time.
All
Take
right.
care.
Thanks. Bye.
Bye.
Bye. All right. All right. So now I'm going to show the numbers put out by our local association, Bay East. We're going to start in Fremont. And as we mentioned earlier, there's a lot more inventory than there used to be. So buyers have a lot more options, but of course, because with more options, more supply, and the demand not keeping up, we definitely see in almost all cities, but not everyone, that prices are going down. So for Fremont, definitely big, not big, but yeah, good curve going on with prices. So and inventory is still very high. Like April was 125, May 126, June 128 for active homes on the market, compared to the low last year was 15 in December. So And the highest point anytime last year was 84 in September. So, we
That's
are
pretty amazing. Only 15 in December.
right. So definitely everyone put their homes on the market and they're still on the market. Pendings did jump up at the end of May, so more, buyers actually it seemed like the demand was going back up. It went from 58 to 88, but in June it went back down to 55. So definitely seems like demand is just not keeping up with how many people are trying to sell their homes. So you can also again see with the month supply, we're at 1.5 for Fremont. So definitely a good time to be a buyer in Fremont
Yeah.
compared to where it normally is and how it normally is. Okay, in Hayward, I'll zoom in as well. Again, very similar numbers to Fremont. I'm just going to go the last three for actives: 124, in April, 127 at the end of May, 124 at the end of June. And again, a slight uptick in pending from April to May, but things went back down in June to 50. So still, again, not that high compared to how many homes are active. And the month supply is actually even higher in Hayward at 2.2. So again,
It's
just
interesting. Actually, Hayward, the median sales price went up.
yeah,
Where
it is very interesting because you would think with demand going down and so much active, you would think it would be the other way.
right,
Um,
because over there it shows. Yeah. Okay. Mm.
There was a very well, no, yeah, that is very interesting. But pendings are also look like they're going down. So I imagine they could have, I'm not sure why it went up, but most likely, it's going to go down the next month. All right, for Castro Valley, again, what we're seeing in most other cities, inventory is much higher than it has been. Although it's been steadily increasing, whereas, Fremont and Hayward had like almost the same the last 3 months. In April was the end of April, there was 55 active homes. The end of May, there was 64. At the end of June, there was 76. And again,
That's a lot for Castro Valley.
right, again, historically, the high last year was 56.
Yeah.
But pending, they're staying kind of like they are not going up. So, they did go up from 23 to 34, but still just at 35 at the end of June. So again, there's a lot more option to 2.3 month supply for buyers, and so for sellers, again, we've had three homes that are currently pending on the market and all actually got multiple offers. But we also all started with lower price points because we knew that if you want to, if you don't put that home in the right price, it's going to sit. And that's what many of these homes are doing is they are just sitting and they are riding the price down and down and down and trying to make corrections. So it's definitely not a fun time for those sellers. But luckily our three sellers, they all price it well so that they got multiple offers and aren't, as I said, we're all pending. Okay, San Leandro. We have Again, inventory is up. I keep going back to April. So April was 61, May was 66, June is at the end of June was 62. Pendings again about to stay the same. Slight uptick again. A lot of places in May. So it went from 22 to 31 to 28. But then yeah, overall again, if we see the curve, prices definitely appear to be going down. All right. So Oakland, on the other hand, following kind of Hayward, I'm already forgetting which city it was, had that little upward tick with the prices, but
I think it was, yeah, it
Hayward,
was Hayward. It's
Hayward, yeah.
Hayward.
So Oakland is interesting because there's definitely an uptick in price. Their um, inventory is not, I mean, it's actually very interesting because unlike a lot of other cities, like Oakland, actually the highest for active homes was last year at 638, and they have not. Where a lot of cities have gone well above and beyond, they haven't hit that. So they're at 498 the end of April, 514 the end of May, 516 the end of June, and pendings again increased from April to May, and they actually increased again in June. So um, looking a little better for sellers, but less, still a lot of inventory though. Like if compared to all the cities, it actually has the highest month supply, which is 2.7. So still not a bad place to look, but definitely seems to be, unlike the other cities, at least in terms of prices appear to be going back up. Okay, Alameda, the inventory actually went down a decent amount, where a lot of the city either kept going up or stayed the same. From April it was 39, it jumped up to 49 at the end of May, but it went back down to 39 at the end of June. Pendings all stayed the same, but we do see overall that the median sales price has been going down. And Berkeley, very interesting because it had the biggest inventory was actually back in April. So where the other cities, stayed the same or kept going up, they've actually went down from 109 at the end of April to 77 the end of May to 69 at the end of June. And pendings, again, like a lot of cities, it kind of jumped up in May, but they're back down to 42. So I do show that prices are going down. It seems like with inventory coming down as well, they might start to level out a bit. All right. And in terms, our next city is Lafayette. Um, Again, it's kind of similar to Berkeley. The inventory at the end of April was 50, went up in May to 58, then went back down to 49 in June. Pendings all stayed the same. And we do see overall the median sales price has been coming down. And Pleasanton, again, very high inventory, especially when you look over the past year. The highest anytime last year was looks like it was 88 last June. But in this year, we had 107 in the end of April, then followed by 117 the end of May, by 102 the end of June. And pendings, again, went up in May, went back down to 42. Still not like drastically high. So overall, just again, there's a lot. Buyers get to be picky. There's just, if they don't like something, they get overpriced. There's other options for them. And lastly, Livermore, again, similar with the inventory at the end of April, 125, May, 127, June, 124, and pending's all about the same. So definitely, again, it's, I think a good time to be a buyer. Historically, the Bay Area has always had a shortage of houses. It's always very competitive and very difficult to buy a home. You have to, typically waive all your contingencies, but we are not seeing that right now. So, sellers with a lot of equity, I think they're all going to do fine. Especially we have sellers that are selling their home and buying another home, so if they sell their home for slightly less, they buy another home for same, less, and they're going to be doing just fine. Um, so it's definitely, a good time, I think, for buyers if they can manage the interest rate or get the buy down that we talked about earlier. I think it's definitely a good time for buyers to be looking because they just have far less competition and way more options than they usually do. Anything else you want to add?
I would say because, we've had quite a few open houses, and pretty much all the open houses that we've had have ranged between, I think, a minimum of like 12 groups all the way to like 24 groups. So that's quite a lot of people. I mean, we're talking a lot of people are coming through. It seems like no matter what else is going on in the world, in the United States, people still, if the place is priced well, checks all the boxes, there's still interest, which shows why our last three sales all had like between, how many did Wesley have? 2 to 4
Four.
offers? 4. So yeah, I think that's all good. Um, and now we're right in the middle of summer. People are on vacation, graduations are over. It's hard to believe when we meet back in another month in August, it'll be back to school time. So it seems to go quick. But I would feel to say that it's in my opinion, a healthy market. Sellers can sell, buyers can buy. And interest rates of, because didn't we have somebody get an interest rate at 6.25, I think? One
Yes.
of the buyers, and yeah. So I think it's good. So I'd say healthy market. So I'm going good stuff. I'd say happy
Hoping
summer,
that it's not as
everyone.
skewed. Like normally it's always very skewed towards the sellers, but definitely seems much to be a much more balanced
Yeah,
market for people right now.
yes. So I'd say happy summer, everyone. I don't have anything else to add. So happy summer. Weather is great. Enjoy the farmer's market. Enjoy all the fresh fruits and vegetables, and just have a happy summer.
All right. Bye.
Bye, everybody.